G'day guys, hopefully you can hear me. I'm not sure if that's the case. Testing one, yep, I can see something moving on the volume meter. I'm going to talk about the charts. It's interesting times at the moment, and it's good to discuss what's going on for some people out there. I haven't done it for a while because I've been busy pretty much trading and not much to report until recent updates I did, and I'm just going to continue on with that, and new data is flowing in, and I'm going to give my opinion on that as well. So it looks like we've got good times to come. Let me just get the YouTube channel. I need to jump on and put the links there because others prefer that. So let me just add the YouTube channel into the description and help people out. Just give me a minute or so while people can join in as well. Nice and warm night tonight in Melbourne, Australia. It's been a good 2 days so far. Let's see where we got. Where's that link? Oh, there we are. Cool. It's there. And that's the YouTube link there. Got a delay effect there. There we go. That's the YouTube link in the description or the comments. So how to go live? I want to go live. Please, can you tell me? Okay. I'm sure there's some YouTube videos on how to do that. Basically, I'll show you quickly, but give me a sec while I finish and prepare myself. In the description, YouTube. Where's my favorite Bitcoin chart? Okay, that's my Ethereum chart. Ethereum is not doing the best in short term. Now, how many people we got? Okay. Okay. That is my Bitcoin chart. Let me just move that across. Right to the front. Whoops, don't want to do that. All right, someone quickly asked a question. How do you do YouTube or do a stream? You go to your profile under here, so you've got ideas, and then you've got stream, and you create a stream like that. But I'm already doing one, so you go through the tick. I'll just go with the wizard, the prompts, and there you go. So that's pretty much it. Very easy. Create stream. You have options. Upcoming seed. That's my upcoming. Recent. That's my history. And you can save it or delete it. There's options. You just go through that. All right. That's pretty easy for many people to do. All right. Here we go. What looks like a bit of a confusing chart. Bitcoin has given us grievance at this point, and it was a puzzle that I struggled to work out until the last moment. Funny enough, it did show me a lot of bearish signs, and And the problem is and I remember listening to someone before in the past where in a bull market, bearish divergences don't work, right? So learn that one. Bearish divergences don't work in a bull market. And the opposite is the same. In a bear market, bullish divergences don't work as you expect them. They work when they do it, and then it gives you the answer, but those two things have come true a lot. So just to recap what we've been looking at, and let's look at on the, let's say, daily. Let's get rid of some of these moving averages. That's my 50 and 20, and we've got that's a 200. We'll leave the 200 there. So the 200 is looking good. Now, remember I said about the bearish divergences? Look at this. We have price going up, and we have bearish divergence going down. This is on a daily. Eventually it breaks, yeah, but how many, look, I suppose that each one is a correction, but you can see that line on the daily on the RSI gives you a good indication, but it doesn't really tell you when it's going to drop significantly, yeah. So that was a good indication, and I use this to work out when to go bullish. Right there, perfect. So you can pick a tool and be good at it. That's when we change trend. Funny enough, if on the daily, if you look at, once we drop below 50% on the RSI, we became bearish. So once we drop below 50, see how it drops? And I'll put that there. So here, this is where we drop below 50, and you can see what the dump on the daily. So these are the things that you can learn. And similarly, once we went above 50% on the RSI, we went bullish. These are the tools that we use to have an understanding on a bull market or bear market and so on. Right now, we're still above 50%, and what we've seen is a hidden bullish divergence, really. So let's just do that. If this moves, come on. Why isn't that moving? Ah, okay, I've got another tool right there. All right, we'll need to do that differently. So what we have, realistically, it could be a wedge in a way. Let's see, let's just broaden that, isn't it? So what we're looking for is a real bull market coming, a big breakout. So on the daily, we can see the RSI working its way, and on the daily, it might do this, hit there and find a rejection, and then bang, and off it goes. So you can see that, and as it's going to break up, let's put our Fibonacci's and so on, so we have a good idea. But you can see the RSI, the MACD is also turning up on the daily, 2 days, so on, and you can see the Phoenix also doing a double bottom and up it's going. So everything to me looks bullish from the indicators on the daily. Let me just delete those for the time being. What do I have here? All right, we'll just leave that there. So let's put our fib levels in. And yeah, that fib level was and is the resistance. And you can see how perfect it is. Bitcoin, you will find that it really works well with Fibonacci. And you can see how we find resistance there. Resistance, resistance, and therefore once we break it, it goes up. Then we find a small resistance on the next fib, find the 50k resistance, then we find support on this 0.5 Fibonacci. So we range sideways. We've got this 200 daily moving average also acting as support and pretty much pushing it up. So this level here, which is 50,500, we need to break. Are we going to break it? Yeah, I think so. This is accumulation. This range, midsection, has been accumulation. Here are the early comers, and that's why the smart money came in here. And as it went up, the dumb money, I suppose, hasn't come in yet. they might start coming in when it's doing that. But this range is accumulation. So if it does come back down, you should buy it. I don't think it is going to come back down based on this, but you never know. Let's clean all that up. So what we have, in essence, is a clear resistance. Now here's the other thing. This is a neckline. I've obviously marked it before. This is a neckline. And what is a neckline? A strong resistance. So on the way up from this bounce, you can see the confluence of resistance, support. Here there was a bit of a support, fell through, and when it bounced down and came back up, we found levels of significance. So this level is very strong. We're still not there yet. So that's our level to break, and it's the 0.618, funny enough. So that golden ratio, this sideways motion, I think we've tested enough. So we have 2 days rejection there, another 3 days there rejection. So that's pretty much a lot of rejection to the downside. It just kept holding it, even though it tried to drop. It kept holding it up. That's what we're saying. So the pressure is upwards now. It's just been bought up. So the mentality needs to come through. It's not just looking at levels, looking at the psychology of the chart. All right. So I do see this bullish. What gives us, and then we have confluence with the 0.5. We have the 200 daily moving average. All this adds up to a business case as to why it's bullish. All right, now let's look at another formation here. So I think we're going to do the 30-minute. Let's have a look. So we had a lot of noise in this area. If I recollect, we had this. Hold on, let me give a sec. From there, we had this trend line. Hold on, give me a sec. We'll get it right. So that was a trend line that acted also as support. So we've got the Fibonacci and this trend line that acted as resistance, support, and therefore level of significance as well, support. And it's on the 0.5 Fibonacci level, yeah, as we said. And in a local sense, if I get this from the bottom to the high of the resistance, it also acted as the 0.618 Fibonacci level as well on this wave. So that level has a lot of volume and we break through it. So again, it becomes significant. All right, let's go back another step. So I'm giving the reasons why we're not going down. It had plenty of chances to go down, and that's what I was looking at on the bearish perspective. I thought this was an ascending wedge. It fitted the model. I thought that was going to be the case, or you can do it like that. And either way, it did work up to once it broke, and then it should have kept going down. If this was an ascending wedge, it should have kept on going, and it didn't. So that tells you that this formation is invalid. And this formation looks very similar to Ethereum. And we'll do that. We'll bring out Ethereum, but here we go. So in the smaller time frame, it became easier as the last minutes came through. it became easier to trade. So I am going long. So I've got a few going. This was a clear sign. Like this was I think it was like that at the time. And once we got this bounce, we found our resistance here. So if you do this from the low to the high, that's not the one. So you do the low to the high, and it's the wrong template. Give me a sec. Reverse. You can see that the 0.618 from the swing high to the swing low, the 0.618 all along there was acting as resistance. And now, rejection, 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 rejection. Now we break above it. Now it's going to act like support. It might do this, and then up it goes. If it ever has a chance to come down once more, which I doubt it, I would buy. It's the last option, but I don't think that's going to happen because it took a fair bit of effort to break that level, and so it's, to me, it just shows you that all these rejections eventually it's just knocking on the door and it's weakened. So there's a lot of reasons why this is bullish. So here's the last stage, really. What do we see? It could be potentially an AB. Hold on, let me just clean that up. Let's just get rid of this line. In many cases where we have a drop like this, you can look at this as a broadening wedge as well. Yep, just like that. And we had our count. We had our A, B, C, D, E, and then up. And then we'll obviously a nice rejection there. And now that could be our A. That could be our B. And potentially, so let's do this way. A, B, C. Oh, I'm wrong way, sorry. I'm mixing it up that way. A, B, and C. Off it goes. So that's a bullish move on impulse. 1, 2, 3 move. Whenever you see a 1, 2, 3 move, it's usually a big move. And this is likely to be. So that length there, we can use that as a means to gauge the target as well. So let's have a look at that. There's many ways of doing things, right? Different perspectives. So let's get the Fibonacci tool from there to the top to the bottom, and let's see where we go with this. Whoops. I want to go into a bigger time frame. Short-term targets, that's what I'm looking at. There we go. So just doing the swing low, swing high, and swing low. And you can see on the, when you look at it on the 4 hour, it looks much more bullish, doesn't it? All these green candles on the 4 hour. So usually the 1 is the first target, and then the 1.2. So if this is a massive triangle, okay, so this could be a A. If it's going to be a free, an Elliott wave formation, that could be a B, that could be a C, D, and pretty much up it goes E. So we can have this big ascending triangle under major resistance. I've spoken about that in the past, so that's possible with this strong move. And you can see that this trend line is significant. and it's likely if this was to come down, which I doubt it will come past this level. This level is strong. If it was to come down, this is your last area to buy before it goes up. I would look at it that way. If it comes there, great. That's another level to buy. As you can see, resistance, support, it's a fib level, and so on. So that can still be another level to go through. And the targets, as I said, you could do it a few ways. This is one way, and I can see that I've got a 1.618 golden ratio from somewhere. Let's see where that comes from. What's he getting it from somewhere? Let me just change the color to white, and I'll. Okay, that makes sense. So what I've done is I've used, this is the 0 reference bottom, and this is 1, and then this is the extension. So we can have mini layers. We'll put those in. So we can have steps. So this is definitely going to be a resistance level. You can see that. We've got 2 fibs there. So this can definitely be a rejection, which could be a retest of this support, and then to the 52K. And I think that's where we're going to find a bit of resistance. But the target is up further up. 60K will be probably right there. So what we're doing is we're going to work our way through all this. So this level is very significant, and that is, let's see what that level is. 58. Okay, so 58 is very difficult to pass, and we might not pass that. We might get a correction, a bit of a pullback. So once we get to that level, 58 to 60K, I think is going to be a nice pullback. So with the assumption that we break that, all right? Once we break that, and if there is a rejection in this quadrant, well, you can see that's going to be a strong support. So once we get there, this is where it's a good opportunity. So I would be prepared to sell here a portion of a profit, take a portion of profit, because it's just a lot of resistance there. So it's definitely going to come back. How much it'll come back, no idea. But I would definitely take profit there and let it come back down. I think it won't pass this level because we spent so much time trying to break it. So this is a strong support area, and it's the neckline that's been proven in the past. In the past, this was roughly left shoulder, head, right shoulder, and this was a neckline. And if you do that, it does reach a certain point. I believe this was the scenario, so we can't use that. We've passed certain levels, so this is a significant area of breaking before we go to the upside. Now the RSI is giving us a reason for that. Let's have a look at a few other indicators that will give us a story. So what have I got here? There's another tool. I'm not sure what it is though. Okay, this is the volatility tool. So on the daily, you can see volatility, it was dropping. Very low volatility. And you can see that there's going to be a big move coming. Very much so. You can see that was a volatility dropping, and then we had that big move to the upside. We also had this volatility dropping right to that level, and you can see the big move, which was to drop. So these volatility tools tell us that there's a big move coming. And in this case, I think the big move is going to be upwards. So once we break this, I think it will I think it will push it very quickly Because in the past, you can see how once we break a key level, price just moves very quick. So this volatility tool is also giving us reasons that that's going to be a big move. I don't need this anymore. And what we can do is add the Phoenix, one of my favorite tools. And let's see what it says on the daily. So this is the 4 hour. Don't want to use that. And you can see on the daily, you've got to know how to read this tool. Basically, when we can see a bullish divergence. This is the hidden bullish divergence coming in. Yeah, just pushing it up. And now, ever so slightly, we're above the 50% on this daily chart. The RSI is above 50%, and we've got this red turning around and going up. So that is a very bullish sign. In the past, you could see that if I was to use these reference lines, the green, so once we get a crossover and we've got this energy level momentum to the upside, give that as an example, you see that it's a big move. It just tells you this momentum. And then obviously the real confirmation is when the green and the red is above. So when the green and the red is above 50%, this shows you that there's a momentum. And you can track that in the past. So similarly, this tool on the daily, as soon as we get above 50%, like here, and then we get the red RSI above 50% as well, you can see what happens. Basically the same. And obviously you can find the drops using the same method where it crosses over. So that's a crossover, energy is below 50%. You can see those red and green crossing over, energy is below 50%, and you can see how it just dropped. Obviously there's more context to that. This is one indicator that gives you a real good idea on how to read. Now we can see that this red was coming down, now it's turned. The green came down a few times, now it's gone up. So, and obviously now the thing is, if you look at the bull market, right here especially, I'm giving a bit of a tutorial on the tool, you can see when it does this, where the red and the green are very above 60-70% and it just goes sideways, while the momentum, you can see it's just going up. The trend's just going up. So it will leave the yellow stuff behind. And here is another one where it just keeps going up and the yellow stuff's down. So and the opposite is with the bearish market. All right, so that's what I have. Just to sum it up, wrap it up. The next fib target is our next target. So once we finish with this, that is the next one, which is probably 56, close enough. There's one more way of doing it. Give me one more sec. We can use this to this one here. Okay, and you can see how that's also playing as a, and let's just put these in. 0.786, that's one. And that's pretty much it. So that could be the immediate one. And it makes sense if you look at it. From there, you can see that this resistance there, right there. You can see that, actually make it green or blue. Right there, you can see that matches that fib level if we were to use this point as reference. So if we use that fib, top of the fib and the bottom, rather than here, you can see that this blue line is another fib level. So what we'll have is potentially continuation. But once we get to that top level, I think, maybe it's a broadening wedge. Yeah, maybe this broadening wedge has something to say. That's what I got. Give me a sec. Got any questions? Raise them. I'm going to have a look at the YouTube guys, see if they've got any questions as well. I'm just going to close my window. And I don't want people outside seeing inside. Give me a sec. All right, let's have a look at the YouTube guys. Any questions? No, no questions. Anyone online? Not sure. Let's do a refresh. All right. Let's continue on. All right, so that's my perspective. If you've got any questions, yep, just raise them. Otherwise, I'll just continue on. If you haven't seen my post, I did talk about Bitcoin dominance. And in my post today, we had this ascending wedge, pretty evident. If I was to close that, you can see what the actually, let me just save that and just go through it. We had an ascending wedge. Oops, oh, let me delete that. All right. So that's Bitcoin dominance. And we had a breakdown. So it's a big macro, what do you call it, bear flag. And once we broke that, and you can see it worked perfectly, classically. I can't believe Bitcoin dominance does that. But once you have the break below, retest, and then down. Here's the root of that, and here's that. So this is our range for Bitcoin dominance to bounce. Now, I was just saying that we're bullish, and it could be possible that the bounce for Bitcoin dominance is for it to go to the upside. But this is the range that I think Bitcoin dominance is going to go up. Today we already had a bit of a bullish candle. This is the daily, and if we apply Fibonacci to this, you can see where our resistance is right there. And we can also do a Fib extension down, and that has confluence there as well. So that's not going to help us, only this one. So this formation is roughly telling us that we can have, so the RSI is coming down, as you can see. Now, the RSI's target might be there, could be there. So that's previous history shows you that that's the range where the RSI is going to find a bullish divergence coming up. So in the short term, it's going to build up. It's not just going to happen in one day. Just like here, we've got a lot of candles. We've got a lot of candles in them. Actually, some of them like there. There's a lot of days where it just takes a while for it to come down. So what we had here is a confirmation that this was a wedge in some sort. In that case, we had this broadening RSI, and that's the breakdown. Now, what we might be having is a wedge of some sort, or a breakout. Don't know. Does that make sense? So this could keep going down, and then find support, and then go to the upside. Got to keep an eye on this. This is where we could really make a difference with our coins. Flipping from alts to Bitcoin and back over, timing it is very important in my opinion. You can make a lot of money from that one. So that's the Bitcoin dominance. It gives you a perspective that we are approaching where Bitcoin is going to be dominant. Long-term wise, I still think there's going to be a case where Bitcoin might hit 60. So just say this goes up and breaks the 50K. if it comes to here, it might be 60K. Oh, sorry. We might have something like this, 50K broken, get a rejection, comes back down, and slowly we hit 60K, and then we take profit. And when we take profit, the alts drop, and Bitcoin, as Bitcoin drops, the alts drop more, and then we probably hit there, and then we continue on. So that's a theory at the moment. Is there any proof to that? Well, we're going to watch these lines. Let's see if these lines come in handy. And there's going to be a point where this might be. Let's see if this historically any lower. Okay, so that's the lowest point there, and that might be where the alt season finishes, right there. So Bitcoin's going to be bullish and bouncing around, dominance, breaking and then dropping, and then this is where the alt season finishes, and potentially we have the next, maybe that's where we break the 64K, and this is where Bitcoin goes crazy. Yeah, so that might be where we break the all-time high, and the alts fall back, and then Bitcoin goes up, and then we have this kind of ride. So when was this? 2018. All right, let's add, compare. Let's just put Bitcoin there. Let's see what happens. BTC, USD, the index. That's the index. I didn't want to do that. Hey, 1, 2 charts. No, Chris, hold on. Oh, that's. Oh, we'll do have two. We'll have it separate. Let's split it into half. That's probably better. Ah. Just do the auto there. This one here, we'll add Bitcoin, BTC, USD. Index. Now we need to align this. So top one's daily, the bottom one needs to be daily. And let's just maximize that. So we can see the hairline. That's the hairline. It's going to take a bit of effort. Put the hairline there. Let me just correlate this. If I put that there, I'm going to use the hairlines to work it out. So I need to get that. First of all, I need to move that across. And I need another reference point. I'll do the top. And let's see, where is it? Where's my hairline? Okay. Right there. All right. So just give me a sec, guys. Point of reference. That's close enough. Right. So when Bitcoin was going up, there's a point where Bitcoin dominance kept going up. So here, when Bitcoin dominance was going up, or when Bitcoin was going up, you can see Bitcoin dominance was going up a lot, much more than the alts. Then when Bitcoin hit a certain top, the alts started coming in, and that's why we got Bitcoin dominance dropping. This is where the alts came in this area, and this area. This is where the alts all came in, and we kept losing Bitcoin. Even though we dropped, the alts were holding on better. So all this up to that point, the alts were doing better, and then this is where the alts start to lose. The shakeout made the alts lose, and that's right there. We've got Bitcoin dominance. So the alts were losing value all the way through this fluctuation for Bitcoin. The alts were losing dominance, and Bitcoin was going up. Now that Bitcoin's going up, the dominance dropping. So there's going to be a point. This is a picture. If Bitcoin hits 64K,
which is around here. Once if this does that, once it hits it, it's going to go fast because this is going to be a level of significance, and it's going to keep going. And this is probably where the alts are just going to lose, and this could go up, and this line might be the case. If that makes sense to anyone.
I forgot to put the mic next to my mouth. Sorry about that. But that's my point. Looking at the long term. All right. Now let's look at the next big coin, Ethereum. Let's change that. Which one I got? Okay, that's not the one. I want the proper Ethereum chart. So this is the 5 minute. I don't want the 5 minute. Let's look at the daily. Woohoo! All right, let's get rid of this because it does help. And you can see my RSI, how I found levels of entry. So as this kept dropping, this was a level of significance for the next move. RSI is dropping, level of significance, next move. So my red lines, all these points of significance with the RSI and pivot points, if you could say. So that gives us an indication that right here, I had the same line and I had this trend. So this yellow line is holding it. And as soon as we break that level, that red line, you can see how Ethereum went up. This RSI pretty much helped. Where are we? Here we go. Right? This is when I flipped from Bitcoin to Ethereum. I knew Ethereum was going to go. I got the Ethereum Bitcoin chart as well. That gave me another hand. So I did really well timing that. And you can see a little there, a little mark, which is the alert. I don't need that anymore. They gave me the idea. Thank you. And that blue line was the level of support that I wanted to see break. And so what did we have? Here we go. Smaller structure. This is a daily chart. And if you look at this chart, if I'll go to the, I don't know, 1 hour, you can see that Bitcoin is pretty much in the same part. Let's maximize that. So this is what I'm thinking, and I posted it up as a fractal. Actually, where are we? Instead of me doing that, going through it all. No, I didn't want that. Where are we? Here we go. And my ideas. Here. No, that's at an Ethereum. Here's a fractal. Okay, here we go. You can see that that's the Ethereum chart and that's the Bitcoin chart. Ethereum is ahead. So at the time we were doing this, you can see how very similar trend line, similar formation on the breakdown, but the only thing is Bitcoin is a bit more bearish than Ethereum because Ethereum had a more of an incline, lower highs, or higher lows. So each low was higher. Here it was just flat, and you can see that was an ascending or symmetrical triangle, whatever the case, and it was knocking on towards the top, and you can see how that made the move to the upside, and you can see my signal. Yep. No, I didn't want to do that. And in Bitcoin's case, very similar, except for that. So that was a fractal I was looking at in terms of trading Ethereum versus Bitcoin. Where do I put it? Don't want to lose it. Ah, here we go. And so that, if you look at that, all right, just have a quick look. And now we're going to look at Bitcoin. Let's just get rid of all that. I'll just clean it up. Yeah, I'll save it. And I'll delete it. And I go to the 1 hour. You can see that breakout, very similar to Ethereum. Yeah. Where Ethereum was more. And I'll just do Ethereum here. What I'm saying is Ethereum was leading the way in terms of a trend. And this is the 1 hour, so I'll get. Oh, we're not there. Here we go. That formation. Let's just stretch that out a bit. Okay. So Ethereum was more bullish, like I said. Now what we can get the confluence from this is we had that, and the breakdown. We had this, and the breakdown. Okay. This is much more flat on top. This one's more round. Then that's no different to that spot there. All right. And then what we had with Ethereum, we had this symmetrical triangle. Much easier to read. For a breakout, that was much easier. But you can see Bitcoin, pretty much the same. So what's happening with Ethereum is it went up just the same, hit a resistance level. In this case, Ethereum really pulled back and then retested and then crazily went up. So this could easily do the same. Retest and go back up. But I don't think that's going to happen because the way this operated, this was of a grind. This was much more bouncy. Because this is a grind, I think this is going to grind as well. So I think, like I said, I think this level is probably the only level that's probably going to get tested. If it is, I don't think it's going to go down much. And this could be probably a grind, maybe two or three moves and then up. So this could be a little small ascending triangle. But I'm using Ethereum as a platform leading the way. It's just taking longer with Bitcoin. Ethereum is much quicker. And then we have this big move. So using that as an example, so if this was our example, let's add 216, 212, and what's the 2414? All right, let's do a good job of this. This is where it started, and this is where the resistance is. And so, yep, 1.2. So each level had its mark, and obviously, I think that's about 2. So if we add 2, where's 2? Perfect. So Ethereum is having all these levels. All right, I'm going to come. So I think if Bitcoin is going to do something similar, this paves the way for this to go ahead, right? And that's pretty much what I have at the moment in terms of justifying. There is on-chain data stuff that I don't want to talk about. It just takes too long. And what I'm going to do now is my family is asking me to have dinner. It's dinner time, and I'll leave it at that for the time being. And then for the alts, I'll come back after dinner, which is come back in an hour's time. So it's 7 p.m. here, and I'll come back in an hour's time, and I'll continue on with the alts. please give me a like and a share. And if you've got any questions, just post it here. But yeah, sorry guys, but it's already been an hour, close to an hour. So that's what I got. I'll do the alts a bit later on. And please join me. All right then. Thank you very much. I'll talk to you soon. Cheers.